Well, there's been a lot happening in the stock market lately. Now, the overall market is struggling to go anywhere at all. There's no lead from Wall Street. You've got the oil spill in America, which is continuing to cause problems. The US Federal Reserve has left rates on hold, but they would because the US economy is still struggling to grow. Europe is a basket case, and here in Australia, we're still waiting to see if the government pushes ahead or decides not to with the resources tax, which did lop a lot off the valuation of resource companies and subsequently off the whole market. So the market at the moment is what they call range bound between about lows of 4,300, highs of 4,500, 4,550. However, having said that, there's lots happening to individual stocks. Now, this morning, Foster's was up about 1.5%. We've spoken in the past that it is a clear takeover target, which, as Dad has told you, would be unfortunate from the point of view of another Australian icon falling into foreign hands. But I think fall into foreign hands it will. And the word on the street today is that Heineken might be having a look. They refused to say whether or not they were doing that, but usually when companies aren't, they confirm that they're not, and if they are, they just say nothing at all. So expect Foster's to come under, well, it'll probably go up, but it'll come under pressure for being a takeover target. David Jones was in the news the last couple of weeks. Its CEO resigned under what you'd have to say were mixed circumstances. He'd been possibly doing something he shouldn't have at corporate functions. The good news for David Jones shareholders is that his replacement, Paul Zara, is just as capable, some people say more so, and has been with the company for over a decade, so he certainly knows what to do. David Jones shares haven't suffered too much since the departure of Mark McInnes. Resource stocks were stronger when Julia Gillard became leader because she said she would negotiate on the mining tax. They have slipped back since then because other figures in the Labor Party have said that the rate of tax isn't up for negotiation, and people say, well, if it's still 40% and you're still going to define super profits as anything over 6%, what is there to negotiate? We'll find out in the next 2 weeks. And finally, a stock that was in the past closely associated with my father is Elliotts. Now, it's been hit pretty hard this year. It's had big downgrades in profits, several of them, and analysts hate that. But there is a rumour doing the rounds that Wesfarmers might be interested in buying Elliotts. Elliotts, of course, has its rural banking and merchanting business, which is of some value to quite a few people. Wesfarmers owns another business called Landmark. Elliotts could be a takeover target, but it does have too much debt. It's not producing much cash, and I think if it doesn't get bid for, well, it's not a stock I would want to be in. So there you have it. Lots happening in the market. Don't expect overall direction, but plenty of movement from individual stocks.